welcome. You're watching Money Control. I'm Sakshi Batra, and this is a very special webinar on understanding the importance of term insurance. Well, the COVID-19 pandemic has increased awareness and pushed a part of the uninsured population to finally buy an insurance cover for themselves. Many studies which have been conducted in the wake of COVID-19 have also pointed out that both term and health insurance are starting to become a cornerstone of personal financial planning. While this is definitely good news, data by IndiaFirst actually suggests that 75% of Indians still remain uncovered by any form of life insurance. And of the ones insured, only 8% have enough cover to secure their family's future financially. It is therefore imperative to really understand how to go about finding the best life cover for yourself, what are the riders one should know, and more. Joining us today is the management team of IndiaFirst Life, a leading life insurance company in India. We have with us today Ms. R.M. Vishakha, MD and CEO of IndiaFirst Life. Welcome, Vishakha. Good to have you with us.
Good to be here. Thank you for having me.
We also have with us Mr. Rushabh Gandhi, Deputy CEO of IndiaFirst Life. Welcome to you, Rushabh.
Thanks, Sakshi.
Appreciate you both joining in on this webinar. It's indeed a very, very important topic that we are going to be talking about. So without much further ado, let me jump right in. And let me start with the lady first. Vishakha, I want to understand from you, what has been your experience over the last 3 months of lockdown? And what is the impact of the pandemic that you have really seen in your latest conversations with your customers as well?
Actually, I think one of the most important things that we have seen is a complete resurgence of the instinct for survival that's actually creeped in from everybody. You know, you would never find this kind of a response, a mass response to lockdown, which has been adhered to, if not for the fact that the entire survival instinct of all individuals has come forth. When you see that, and that's the most primal instinct, right, of staying alive. That is what you see majorly. And once that has been over, I think people are then kind of saying, okay, hold on, we're all safe. We're looking after ourselves. Now what next? And I think when you start looking at what next, you start getting a little more pragmatic, a little more practical, and saying, now I need to ensure that if something happens, then I need to be able to, the family needs to be able to survive. You see a little more pragmatism and little less taboo in discussing the possibility of death, in discussing that you need to be prepared and you need to start looking at some kind of an insurance for your loved ones who will survive the pandemic in case something happens to you. You're also seeing, you know, a less of taboo on wills and on will writing. I think that is one thing from an insurance company perspective that we believe is good. Because earlier, whenever we would go and try to talk about plan for your life, plan for the fact that there is a certainty that you will get married and you will have children, there's also a certainty that you will die someday. The uncertainty is in when. There would always be a lot of taboo in talking to a life insurance company. I think that has gone away. You see people being more pragmatic about it, people being more willing to talk about insurance. I think that's a big change that I see.
Well pointed out, Rushabh. I'd like you to also add to what Vishakha has really talked about, the taboo having got removed to an extent, and also people being more pragmatic now, especially when we talk about, like I also talked about it in my introduction, that the number of people having term insurance is still very low in India. And perhaps there is a common notion that why don't I put my money in my savings for, just like how Vishakha said, for my children's marriage or for education instead of paying that premium. So for the benefit of all our audiences, could you really highlight the importance of having a term plan, especially when we look at it at the backdrop of the current pandemic and the crisis?
Absolutely, Sakshi. You know, the need and the importance of having a term plan can never ever be undermined. Like you rightly mentioned, you know, India is a underprotected country. You know, the penetration rates are abysmally low. The protection gap, like you mentioned, is fairly high. So which means that the folks who are actually buying an insurance product are not buying the right amount of insurance. So my humble submission to the audience is that yes, it is an absolutely critical product that you must have in your portfolio. uh, Term insurance per se is primarily used as an income protection tool, which means that in layman's language, today, if something unforeseen was supposed to happen to you, your family will have a cash flow which is not compromised. That effectively means that today, let's say if I'm earning 100 rupees, for example, as income, the amount of cover that I should have should be at least 12 to 14 times that, because if something were to happen to me, so let's assume I will get, let's say, 1400 rupees, and then I would put those 1400 rupees, let's say, in a fixed deposit, and I would earn the same amount of money that I was earning now without me technically being there. And the family's needs and family's requirements don't effectively get compromised. So yes, it is a very, very critical product. I would urge all the viewers to have a term plan and to have the right amount of protection. It's not just important to have a cover, it is important to have the right amount of cover.
Absolutely. And I will come to you a little later also to explain to our audiences how should they really decipher as to how much cover is good for them. You did give an example of based on your earnings and 14 times of that. So a little more expounding on that as well will be needed a little later. But Vishaka, let me come to you next. I want to understand you as a company at India First Insurance. What are your plans in the coming year? How has the pandemic really altered the way you go about things? Speak to your customers. Has there been any alteration in the kind of strategies, cover plans, all of those things, if you could tell us?
Yeah, sure, Sakshi. I think at IndiaFirst Life, we've always been a digitally savvy company, and the fact that we were well prepared with our BCPs and well prepared with digital advancements was very evident when we looked at the way we ended last year.
Right.
We ended last year with a 25% YOY growth, while the industry actually had a degrowth. And that's primarily because we had digital technology optimally utilized. We did not have application forms getting stuck in transit, checks lying in some of our branches undeposited, because our entire journey has always been digitally enabled. We've had a website all along which was multilingual. We've been investing in it the whole of last year, and we've encouraged our website to be a sales place. It is a place where customers come in and digitally hang out, so to speak. And what we do see now is that more customers have come onto our website. We have seen an increase in traffic. We've seen an increase in purchase of products. And we have seen that our e-term products have increased substantially. I think the pull has been higher. So while that is on the website front, the other point that we realize as a company is the element of relationship building. Insurance at the end of the day is a long-term promise. Insurance is commitment. It is to say, I am there when you're not there, or when you need us, when your children are growing up, whether it's a savings plan or it's a protection plan, depending on the plan that the customer buys. What we are telling them is that we will be there for you. Now, that relationship typically gets built, in person. You know, the familiarity of seeing a person, talking to a person, is very hard to replace when you're looking at it from only a digital stance, or when you're looking at it only on the phone. So we have used marketing extensively to build that trust with the customer. So while we interact on the phone, we follow it up with a lot more centrally driven activities, with a lot more centrally driven communication to enable the customer to build trust, to know that the entire series of the phone call and the video call and the communication from the company are all interlinked. So that creates trust, because we understand that building trust is the most important aspect, and we've been, as individuals, very used to building trust when you meet someone, and we're now trying to see how do we supplement
Yes.
that entire building of trust. I think that's been a big focus for us at IndiaFirst Life.
Absolutely. So that could be a challenge also going forward. How do you actually replace a physical meeting with digital, the same kind of interaction that you actually have had on a one-to-one basis? But I think phygital is the way to be in the future. It is the fusion of physical and digital even going forward. Rushabh, I'll come to you and I'll ask you to expound upon what you were talking about in your previous answer. The one question that really crosses everyone's mind before they actually go ahead and buy a term plan for themselves is, how do I decide the best cover for myself? What are the factors one should really base this decision on, really?
Sakshi, there's a very simple answer to this, and there's a very complicated answer to this. I think for the sake of the viewers, I will restrict this to the more simple answer, which is what I said some time back. As a thumb rule, it is always a multiplier on the current income.
Okay.
Typically, it can range from 12 to 14%, and this multiplier effectively starts reducing as you kind of get closer to retirement. Other than that, obviously you need to see where you are in the overall, in the overall life cycle. Who else is there, behind you. What needs you do still have to fulfill from a financial standpoint. So that's when it gets a little bit more complex. But I think for the benefit of the viewers, it suffices to say that take a look at what you are earning and put a multiplier on that. Let's say if you are sub 45, take a multiplier of 12 to 14 times. If you are more than 45, take a multiplier of 10 to 12 times, and you should be good to go.
Okay, great. So that really actually puts it quite comprehensively. Vishaka, there are some more doubts that a lot of us really have when we actually go ahead and go for the term cover for ourselves. If you could also help us understand, what kind of payout option should one choose for the term plan? Say a lump sum benefit on death, or a long-term monthly based income for family?
Yeah, thanks, Akshay. Actually, that's one of the things that I really resonate with a lot. A lot has been written in terms of the size of cover that you need to take, what amount of cover, and Rishabh has brilliantly captured it. I think what people tend to miss out is that the term policies that you're taking is meant for the surviving members. The surviving members could be young children. The surviving members could be your spouse who has immersed herself uh, so much into the family that she's really not had the time to have a lot of financial literacy. And I think what type of a payout option you choose should be based on the financial literacy of the individual who is the nominee or the beneficiary of the policy.
Okay.
People often tend to make the mistake of assuming that the nominee will have the same level of financial literacy and financial awareness as the person who's taking the policy. And I
Right.
think we need to clearly differentiate between the two. Why? How does it translate into a action? So let's assume that there is a fertility, and let's assume that the benefit which was meant for the children is at the age of say 18 is what they get at the age of 10. Now how are they going to manage that money from 10 to 18? They're not going to be able to do it. And therefore, you have payout options which actually give the money to the child when they turn 18. The life insurance company acts as a custodian of that death claim and pays it out. There
Yeah.
are also options where the life insurance company acts as a custodian and an investor and actually gives out the monthly income to the nominees and to the survivors. Individuals have to examine what is it that their family really needs. Do they want to place the burden of managing that lump sum benefit on the family which is already trying to deal with emotional loss,
Yes.
or do they want to plan it to the last mile? And the last mile planning is to make sure that the income replacement happens the way it's supposed to happen. The lump sum benefit comes just at the time when you need college fees or when you need fees, money for marriage. And that, I think, is an extent of complete planning.
Mm.
Buy the insurance, also think about how that benefit is going to be given to the nominees. That's when you have a holistic plan.
Very well put, Vishaka. I'm sure that is going to be of a great help to all those people who are planning to buy a term insurance cover right now. There's one more doubt, Rushabh. I'd like you to clear that most of the people who have actually also come on our Money Control platform, whenever we interact about personal financing and insurance planning, they ask about, is a medical test essential before one really buys a term plan? And also, if you could add, what is the importance of riders?
Okay, so two questions there, Sakshi, and I'll try to tackle
Yes.
both of them. So medical tests depend on the amount of cover you typically would want, and it would depend on your age. So most organizations would have something which in insurance parlance we call non-medical limits. So if you are within the non-medical limits, you don't necessarily need to go for medicals. If you are outside of the non-medical limits, you go for medicals.
Okay.
Having said which, I'm a strong proponent of the fact that why are people shying away from doing medicals? There's absolutely no downside. The insurance company doesn't charge you for it. You get medicals done for free. You make sure that the insurance company is dishing out the insurance cover after doing its due diligence.
Yeah.
And the chances of any false information going to the insurance company gets mitigated. And we've always been proud of the fact that, in fact, we had a campaign running a few months back, which is 100% genuine claim settlement. Once the medical has been done, there is no reason for the insurance company per se, on medical grounds to repudiate your claim. Why do people shy away from medicals? There is absolutely no cost implication. So the answer to the question is yes, there are non-medical limits, but the consumer should not shy away from avoiding medicals. I think the second bit which you asked me was on the riders.
Importance
Is
of
that right?
riders. Yes.
So I'm going back to what I said some time back, right? Insurance per se is an income replacement tool, and you don't need an income replacement product only if you die, right? You might need an income replacement product if you basically lose your capacity to earn income, and that can happen, if you get disabled, for example, or if you meet with a horrendous accident, or if you kind of get some sort of illness which is critical. So this is where the riders kick in, and in my mind, riders are extremely important. You when you buy a car, you don't just buy the engine and the chassis, right? You need literally everything else that goes along with it.
True.
So riders are important because you don't want to be in a situation wherein you bought an insurance product or income replacement. You met with an accident. Thankfully you didn't die, but unfortunately, you were bedridden, and then suddenly the whole purpose gets the whole purpose is not met. So riders are important, and I would urge the consumer and your customers to actually look at all the riders which are available and offered before taking the final decision to buy which insurance product along with what wraparounds.
So do you think the riders of, say, job losses, in the event of job losses, can also be put in? Because this is the time when we are actually seeing a whole lot of people across industries facing job losses, facing salary cuts. How did they go forward? I'm sure they must be very interested to know, are there riders like that they can add to their term covers?
Currently, nobody is actually priced for riders like these. Furthermore, even if a rider like this was available, unfortunately, and I'm very carefully using the word unfortunately, we as a life insurance company would not be able to offer it. So it's an interesting proposition, Sakshi. You should as a backup job think of designing products.
Oh, for sure. I'll be interested, and I'll be getting in touch with you at IndiaFirst for that, for sure. Vishaka, in the backdrop of pandemic, we've been talking a whole lot of changes that are happening in the insurance industry, the way people are actually approaching insurance also for themselves. I want to understand, will high value protection covers see a sharper spike in demand, especially how the virus is actually not going away anytime soon from our lives? So do you think that is going to happen eventually?
The moment insurance has got its place under the sun, and elaborating further from the kind of riders and covers, people start understanding that there is a disability, there is a critical illness, There is a period of loss of pay on account of hospitalization. While you spoke about loss of pay on account of losing jobs, there is also a period of loss of pay on account of hospitalization, on account of
Yes.
inability to work. um, and that is not only covered through an hospital bill. If you see a lot of instances that are happening now is because you have not been able to work on account of being quarantined. So that could be a quasi loss of revenue or loss of income on account of illness, but
Yeah.
which did not necessarily have hospitalization. Now these are all kind of covers that are designed, that can be designed, and you would, I think, see a spurt in not necessarily high value insurance, because I think at the end of the day, insurance value will be determined on the basis of the individual's ability to earn income. So if an individual does not have an ability to earn income of more than X amount, then the insurance company is not going to give an insurance cover of more than that amount. So I think
Okay.
the insurance cover will definitely become more proportionate to the income earning capacity of the individual.
Hmm.
As against just being any random number. I think people will start understanding that it is a replacement of income. It is therefore got to be in proportion to the future earning income generating capability of the individual. uh, there are two principles in insurance which will prevent people from just taking any cover, and which will be one in terms of the financial worth. This sounds a little crude, but sometimes, a directly phrased word really works. And we have a saying in insurance that is, no person can be worth more dead than alive. So, you have to take insurance according to your own ability to earn income. Uh, One of the things that I would lay a lot of focus on in these times, Sakshi, is something called utmost good faith. Insurance companies work on a principle of utmost good faith. Ubrimifide is the word it's used, but what it means is, I am insuring you based on your declaration of good health, your declaration of status. I want to tell all the viewers the importance of being honest.
Yeah.
Because the entire contract of insurance is based on a simple truth. So if the customer is not being telling the truth, the contract does not stand valid. Because barring the application form, we have nothing else to say whether it is true or not. So if later on we figure out that the individual has not told the truth, the contract does not stand valid.
Hmm.
And it can be very demoralizing, not just for the customer, but also for the insurance company. Repudiating a claim gives nobody any joy.
Yeah.
Nobody. You feel terrible doing that.
Yeah.
But then if the contract is not valid, it's very hard to pay a claim on that contract which is not valid. So since you asked a question on non-medical limits, that is, do we need a medical or do we not need a medical? And Rishabh answered that brilliantly. I want to go one step further and say, do not please underestimate the importance of being truthful and honest. Insurance companies, especially IndiaFirst Life, takes pride in giving insurance irrespective of your comorbidities.
Right.
Yes, premium may be loaded. Yes, you may have to pay a slightly higher premium because the pricing is for normal health. So if your health is not normal, but it is at a different level, the pricing will also have to be adjusted for that. But please be completely truthful and have total disclosure while you're applying for insurance is a message I would like to use this platform for.
Very fair point, Vishakha. Also, I'd like to add to that. Currently, everybody, even in most organizations, and I'm sure you must have also asked your employees to go ahead and download Arogya Setu app. Now, there are a few questions there which people have to answer based on which the Arogya Setu app really works. Now, if people do not answer those questions correctly. The whole functionality of Arogya Setu app also has come into question, and many people have really asked that as well. So again, we have to go back and understand the limitations of technologies. Even when we go ahead and get those innovations going, the basis will be only on the information that is provided by the people. So even when you go ahead for a cover along with COVID-19 pandemic, we just have to go back and see how things have moved on even before, and what were the things going on in the person's mind when they were actually filling these details as well. So that is something which we will have to really focus on even in the times to come, because COVID-19 is here to stay. Let me actually now take the conversation to a more complicated level. People where people actually find this to be a little more tough to understand, and that is about the claim settlement ratio. Rishabh, for the benefit of all our viewers, could you really share a bit about your own company, IndiaFirst Life Insurance? Tell us about your claim settlement ratio so that everybody can really understand that well.
The straightforward answer is our claim settlement ratio is upwards of 98.5%, which effectively means that for every 100 claims that we actually get, we settle more than 98.5% of the claims. I'm going to take a couple of minutes more on this one. You rightly said that this is eventually the moment of truth, right? This is something that every consumer, always asks, whenever any, common man is intending to buy a life insurance product, especially a term insurance product, he will ask his agent or his, banker that claim to pass ho jayega na? And that's a very, very standard, question. And rightfully so, he's asking the question to the right person. And while the settlement ratios can be 98.5%, which in my mind will be amongst the best in the industry.
Yeah.
What I would want to say is that for genuine claims wherein every information that was requested for has been disclosed honestly, the settlement ratio is 100%, the repudiation rate is 0%. So the consumer needs to be aware of the fact that if he says the absolute truth and nothing but the truth, there is no way in the world, and there's no reason in the world why any insurance company would repudiate his claim.
Okay.
I was having a conversation with somebody yesterday, and he actually mentioned, and I said, you're absolutely right. I mean, there is no better, endorsement, than, somebody who said that, yeah, something happened, but these guys actually managed to pay the claims within 3 days. And I said, you're absolutely right, because, everyone has bought the product, for this, and at that point in time, if we can't support, then it doesn't really make sense.
True.
So my submission is just be honest, say the absolute truth. If you're a smoker, say you're a smoker. If you have any diseases, say you have the disease. Vishaka did mention that that doesn't mean you will not get an insurance cover. The insurance cover might just get loaded a little bit.
Yeah.
And that's definitely better to pay a slightly higher premium than to have your claim repudiated, whenever something unforeseen happens. So yeah, 98.5% and upwards of that is IndiaFirst's claim ratio, 100% of the genuine claims. And I urge all the consumers to make sure that whenever they're buying a product pertaining to life insurance, or for that matter, anything in life, just say the absolute truth.
Absolutely. Vishaka, would you add to that and tell us, claim processing often requires extensive documentation. In these last 3 months of the lockdown, where you may not have been easily able to reach out to the customers, has that been a challenge, or has digital been extremely seamless for you?
So right at the beginning of this interview, Sakshi, I mentioned that IndiaFirst Life has always been, leading in terms of technology. Our claims process has also been completely digital. We had enabled, even prior to this pandemic, an ability of customers to submit their documents digitally. We accept claims documents on WhatsApp. We accept them, of course, the moment you say WhatsApp, it kind of includes everything, right? That's the simplest form of electronic communication that you can find. We enable that. We do have an automated claim system, and a lot of our claims get settled automatically through the system without even any individual having to go through it. So
Hmm.
our systems are very, very robust. They have always been digitally enabled. We settle claims within 24 hours of receiving the documents. The credit into the customer's account is also instantaneous, and there's virtually no manual process involved, excepting if the case is not simple and straightforward.
Hmm. Hmm.
But yeah, most of our claims do go through an automated route, and it's very, very customer friendly process. We also have a post claims follow up, where we provide grief counseling. We have tied up with an institute to provide grief counseling, an expert in that field, because we understand we may not be the experts.
Yeah.
We call out every customer post settlement of a claim to make sure that they have received the claim, they have understood how to use it, if they need any help in terms of investment support, because we've got tie-ups with the banks, we can enable a better investment of the proceeds that they receive also. So we don't just
Yeah.
stop with enabling the entire claims process and the
Hmm.
claim settlement process, but we go post that to both manage their financial and emotional well-being.
Right. Rishabh, would you add to that and tell us, does digital transformation really play an important role in life insurance customers' life?
Digital transformation is playing an important role in literally everything today, right?
Yes.
And life insurance is in no way any different. I think the reason we've managed to tide over the last 3 months better than what most other people have done is because of the strength that we have as far as the digital piece is concerned.
Hmm.
I mean,
Hmm.
we don't have a single, physical application form coming in. Our entire, customer onboarding process is digital.
Hmm.
So yeah, I mean, you can't undermine the importance of digitization, and it is here to stay.
Now, there is one thing that, Vishakha, I wanted to point out earlier also. Let me just put it out now. Most of the people need to really understand uh, the importance of buying a term insurance early on. So, if you could just expound a little bit more on that as to what is the importance of term insurance at every stage in life, and also buying a term insurance cover early on.
It's so obvious, and that's what you realize when people say that something really obvious is not so obvious. When you're young, your liabilities and responsibilities are the highest,
Yeah.
and your savings are probably at the lowest. Okay, when someone gets married at about 25, 26, they're probably into their career about 2 years. They want to enjoy life. The savings are probably not all that strong, and therefore the loss of any income because of death, disability, or illness will have a tremendous adverse impact on the dependents. Now, when you look at families who have actually put in all their savings to educate their children, and the children grow up, it is done with the hope that when the children start earning, they will also look after the family. Parents don't think twice about giving up their entire savings, because they actually look at the children as support system. So when the children start earning based on the dependents who are there, they have to realize that their life has extremely high financial value. The future earning capability when you're younger is obviously far higher than when you're closer to retirement. Secondly, as you grow older, you also start savings and building up a certain amount of savings, which is
Hmm.
just normal and prudent. And the difference between your income earning capability and the savings that you have will start reducing the amount of cover that you need.
Right.
Therefore, common sense, but and which is supposed to be very obvious, the younger you are, the higher your responsibilities, the higher your future earning capability, and therefore, the more important it is that you buy your insurance policy to the maximum extent possible. Yes, as you grow older, your income is also going to increase. And therefore, you will have to keep revisiting your policy to see if you need to have top up covers and to increase your sum insured, because
Yeah.
the lifestyle will undergo a change and the requirements are going to undergo a change. So you
Yeah.
have to increase your limits also. There is a very popular um, there's a very popular selling pitch which says buy insurance when you're young because the mortality cost is also lower. I don't necessarily think that it has got to be the decision making criteria. The decision making criteria to buy insurance when you're young is because your responsibilities are the highest, your dependents are completely relying on you as an individual, and even if it's a remote possibility that something could happen to you, it is a black swan event and you need to guard yourself against it, and therefore you need to buy insurance as soon as you start earning and as soon as you start becoming a potential revenue generator.
Absolutely. Rishabh, is there a change in the thought process of the new age insurance customers? Are at least the young millennials thinking more about insurance than the previous generation? What are your views on
Good question, Sakshi.
that?
Yes, we are seeing a shift, and insurance typically, you would have heard this saying lot of times, saying that it's been a push product. We
Hmm.
are actually seeing over the last few years, it's actually becoming a pull product. People are asking us that, yes, we do need insurance cover. What is the right cover that we should take? Which is the right insurance company, the right plan, and so on and so forth. The other very, very obvious change that we are noticing is that a lot of the policies that are being bought in today's day and age are digitally influenced, which effectively means that, let's say if you or me were intending to buy a life insurance product,
Hmm.
the chances are that we would actually kind of browse through the net and
Hmm.
figure out which plan seems to be the right plan for me. uh, the entire sales process has not shifted, which effectively means that while a consumer is checking out options on the internet, the actual sale is still happening, through his, friendly neighborhood insurance agent or friendly neighborhood, banker. But yeah, I mean, literally, every customer of ours tells us that, हाँ but ये feature आपका better है ना, and that kind of thing. And obviously they know that because they've done their own research.
Research. Absolutely. Vishaka, let me come to you next. I wanted to understand from you basically about as to how do we go forward from here, especially when we have seen already in the months of, say, March, some premiums have risen. There is news of further hikes as well in the coming months. What does the new hike in term insurance really mean?
I think the hike in term insurance really means that the projection of the mortality rate or the death rate is going up.
Okay.
Um, I think there is a lot of uncertainty.
Hmm.
And when you typically look at pricing for an insurance company, pricing relies a lot on historic data. Entire actual pricing is based on data, trends, and a lot of future forecasting. COVID-19 has proven to be a disruptor in more ways than one. It also has led to a lot of uncertainty in terms of pricing. We don't know what is the mortality rate, we don't know what is the death rate, it has not been established. Unless there is 100% testing, you don't even know what is the base. Today, people talk about the mortality rate to be about 3%, or people say that there has been a death of 3% of the people who contracted it.
Hmm.
But we don't know if the base of the people who've contracted it is actually the base of only those who've tested, because there's so many people who've not been tested.
Hmm.
When you look at countries that have done 100% testing, then you see that that ratio is not 3%, but much, much smaller. When the ratio of 3% falls, then that is actually, similar to a 60-year-old with comorbidities under normal circumstances.
Yes.
It's comparable. So the problem is not having any data. And when you don't have any data to price, because you want to ensure that you stay afloat to meet all the promises that you make to the customers,
Yeah.
you tend to start loading your premiums a little bit to ensure that you don't get bankrupt because you're not pricing well.
Hmm.
So I think it's in the interest of the customer that there is a certain increase in the premium. I would like to reassure customers here that when there is a reduction in premium, at least at India First Life Insurance, we pass the benefits back to the customer.
Okay.
We're talking today about an increase in premium. We have not increased our premium in accordance to the market as on date because we believe that we've got enough experience to ensure that our rates are going to be similar.
Hmm.
However, in the past, when we've reduced rates, we've actually passed on the benefits of an increase in sum assured to our existing customers. We've gone back to our customers and increased their sum insured because our rates have decreased. So that is a promise and a commitment we make, saying that in case we do increase our rates, which we have not done as on date, because we did not feel the experience to be adverse.
Yeah.
If we do increase it, we will also pass on the benefit of reducing those rates to our customers. That's a commitment.
Fair enough. Rishabh, would you add to what Vishakha has just pointed out? Was COVID-19 pandemic, the uncertainty is the reason behind the hike in term insurance across industry, even at yours. So we've already seen about 20 to 40% range of the increase that we have seen across the industry in the premiums. And how does it really affect policyholders, if you could expound on that?
Sure. So from a policy holder's lens, as long as he's bought the policy prior to the increase, his premiums will be unaffected. He's already contracted for the long term, and that contract is very much valid. So from a policy holder standpoint, there is no reason for him to actually get worried that premium increase or so my premiums will also increase and so on and so forth.
Hmm.
I will like to add on to what Vishaka said. So we at India First have not increased our premiums just yet.
Okay.
We are fairly confident, of our mortality tables. Our experience also supports the fact that we don't necessarily need to increase our premium rates just yet.
Okay.
And, I think, I know I'm repeating this, but I think it needs reiteration. We actually had a slightly higher priced term plan maybe 3 years back or 2 years back. And we came up with a revised term plan, which was cheaper than the old one.
Okay.
And at that point in time, we went back to all our old customers and we actually told them that, hey, guess what? For let's say 10,000 rupees of premium, you are getting, let's say, for example, 75 lakhs of cover. Now for the same 10,000 rupees of premium, basis a new product, you get 90 lakhs of cover. So without any fuss, we're actually increasing your cover to 90 lakhs. And that I think is something which was very well appreciated. And I think we as an organization are extremely proud of what we did, because at the end of the day, we are where we are because of our consumers and customers. But
Please go ahead.
who knows what happens tomorrow, right? So yes, the world is changing. Most of the insurance companies have increased their premium. We don't know when we will do that. So the right time to buy an India First life insurance product is now.
Okay, right time to buy an India First life insurance is now. Vishaka, you did point out that in the last 2 or 3 months, we are seeing a lot of uncertainty around. So you were actually getting many more inquiries than perhaps you would have seen in a similar period last year when you compare it. But have you also witnessed surrenders during the lockdown? Most of the private insurance, life insurance people have witnessed. So is there anything like that, or are you actually saying that people are actually more aware and they are actually saying that we need probably a top up more than what we usually had?
No, we have not seen surrenders increase at all.
Okay.
And perhaps, that's got to do with our processes, where we invest in the customer to understand the reasons behind the surrender. So for instance, if there is someone who's surrendering because there's a requirement of cash, we give them the opportunities for them to take a loan against the policy. If someone is, in fact, we have got policies wherein the policy is due for maturity, and we have gone back to the customer and said, are you sure you want to surrender? I mean, you should want to take your policy maturity in this markets, because you know ULIP policies have seen a drastic drop, and we've given them an option to extend it and take their policy benefits after a point in time when the markets would have probably corrected again, and they'll be able to get the money they wanted. And we have seen customers proactively availing this option to extend their maturity dates. That is a product. That's a trend that we have seen. Regarding surrenders, no, not at all. In fact, I'm surprised that people would surrender something when there are options within the company itself to tide over temporary cash crunches.
Perfect. Rishabh, I also wanted to bring out, there was another point that a lot of our viewers have put out a concern about, and that is the new alternative tax regime being brought about. Is that a dampener in any sort for the life insurers this year, given that they may invest in term policies to avail of the Section 80C benefits, which they have been doing previously if they take up the other tax regime?
We don't have conclusive evidence on either side at the moment, Sakshi, but I can share with you what my view is that the dominant tax advantage that life insurance has is more on the 1010D side, which effectively means that whatever you get back at the end of the policy term is tax-free. That is a stronger proposition than 80C. Also, in the current scheme of things, you have an option of either opting for the ATC break or not opting for the ATC break, right? So somebody who's really keen to opt for ATC, he still has that option. So I don't think it's going to be a huge deterrent. Yes, out of every 100 customers that you have, you might have 2 or 3 who drop off simply because of this. But overall, the dent that it will make on the life insurance pie is not going to be substantial, according to me.
Right. So I'll just take last word from both of you before we go on to the Q&A session, and where we have a lot of questions from our audience members for you as well. So the last word from you, let's start with you, Vishakha. What are the 3 things or 4 things that you would say that people should actually come to IndiaFirst life insurance only first?
The topmost is what you get is what you see. We are completely open and transparent in all that we do, and therefore we will deliver whatever we promise. I think the values of our company, which we extend across the length and breadth of the organization, which includes distributors and customers alike, which enables to create an entire circle of trust, is we live by some 4 fundamental values, which is do more, think new, be honest, and be helpful. I think these fundamental core values dictate everything that we do, which enables to build the circle of trust. And that's the primary reason why customers should be coming to IndiaFirst Life.
Right. And what about you, Rishabh? I'm sure you agree with what Vishakha has said. Would you want to add to that as well?
Yeah, I mean, I entirely agree with what Vishakha said. What she's touched upon is the softer side. Let me give you some, hard facts, for the benefit of the viewers. So yes, last year we were the fastest growing life insurance company. That's one very strong reason why a customer should actually invest with us. I did mention that our claim settlement ratio is upwards of 98.5%. The moment of truth, we are there. We resolve 95% of our complaints within 5 working days. I think all customers should be, aware of this, and they should they should keep it into the consideration set when they're actually buying a life insurance product. We have a complete suite of products which pretty much capture the entire lifespan of a customer, right from the time he just about he need from a child plan right up to retirement. So we have 35 products. And I think last but not the least, the pedigree, right? So we are owned by Bank of Baroda. 44% is owned by Bank of Baroda. 30% is now owned by Union Bank of India. Which adds a lot more muscle to India First as an organization, because when a consumer is buying a product which spans over, let's say, 15-20 years, he would want to know that who's actually backing this organization. And when he hears names like Union Bank and Bank of Baroda backing India First, the confidence level just spirals. So I think in addition to all the soft stuff that Vishaka mentioned, I think numbers don't lie, and I've given 5 very good reasons why a consumer should actually look at India First from a life insurance standpoint.
Absolutely, those are very well said points, and I'm sure the trust factor definitely remains with the parentage. And we have been talking about it to our viewers, whether it is all the listed companies. We have always emphasized on looking at the parentage also when you actually go ahead and invest in a company. So all the customers investing in you do know that for sure. Let's quickly take up a few questions from our audiences. We've got our first question from Sunny Malhotra. I'll take that question with you, Vishaka. He wants to know, what is the claim settlement process for a policy holder having more than 2 policies?
So the claim settlement process for a policyholder, whether it's 2 policies or 1, is about quoting both those policies and submitting the fundamental basic documents, which are the death certificate and the claim form. We don't reference to the policy number, of course, is important. We will not require 2 different sets of documents when the 2 policies are for the same life assured.
Okay. Roshan Katyal wants to know, and I'll take that question with you, Rushabh. He wants to know, does the premium remain the same throughout the term of policy?
Yeah, absolutely. The premium remains the same. The only change that can occur in the premium is if the tax rates change. So just now, if the GST rates change, then the premium that the customer lands up paying might be marginally different. The insurance company will not change the contracted rate.
Right. Okay. Next question we've got from Abhishek Singh. He wants to know, should I buy a single premium or regular premium policy? Vishaka, could you answer that for him?
It's a choice actually of the individual. Between Rishabh and me, for instance, I remember Rishabh opted for a single premium product when he bought his term policy, and okay, I opted for a regular premium product when I bought my term policy. It is, if you have that amount of premium readily available to you as liquidity, and you just want to do it and ensure that you don't have to carry the responsibility of remembering to pay your premiums every year, of not having any slip up, of ensuring that fill it, shut it, forget it kind of an attitude, then I think a single premium is great, because the single premium does get discounted for future value. So you're not losing out in any way monetarily by paying single premium. So it is really a very personal choice in terms of your attitude. As I said, I preferred a regular premium, and Rishabh preferred a single premium. So with 2 of us sitting here with completely different attitudes towards how we want to do it, I was fine with a direct debit going into my account. I said, I know that I will have it systematically, so I'll pay it every year. And he was like, I just want to get it done with. I don't want to keep remembering that I have to pay this premium. So
wonderful. Wonderful. Answering by example actually really brings up the trust in the audiences and the potential customers as well, to understand what are the thought processes of 2 people who are actually leading the organization as well. Okay, so actually let me take the next question. Sandeep Shastri wants to know, how do you know how much term insurance to buy? Rishabh, you've already answered that in our discussion as well. If you could just in 30 seconds reiterate what you said.
Yes, Sandeep, like I mentioned, thumb rule is if you're more than 45, go for 10 to 12 times your income. If you're less than 45, go 12 to 14 times your income and you'll be good to go.
Okay, I'll take just the one last question with you, Rishabh. Subhash Das Gupta has asked this question. He wants to know, when is the best time to purchase a term insurance policy?
So the best time to purchase a term insurance policy is yesterday. Uh, you know, eh, but genuinely, there is no right time. The right time is now, for the simple reason that no one in the world knows what's going to happen tomorrow, and you don't want to take that chance. So I would urge him to buy his life insurance policy literally right now.
All right, then we'll wrap it up at this note. Many, many thanks, Vishaka and Rishabh, for helping Money Control viewers with all that insight of yours on the various aspects of term insurance. You have debunked many myths and clarified a whole host of doubts, which many must be having who are potential buyers of term insurance cover. And I'm sure many viewers who still don't have a term insurance cover right now are now equipped with all the knowledge to go ahead and buy one right now. And how Rishabh also pointed out, the right time was perhaps yesterday, but you've still not gone ahead and got that done. Go and do that now. Many thanks for joining in. It's been a pleasure.
Thank you. Pleasure being there.
Thank you, Sakshi. It was a pleasure.